Insurtech Story podcast, the platform to spread knowledge on insurance innovation, digital disruptions, and entrepreneurship. Our website, insurtechstory.com, and we are available on Spotify, Apple, Google, and Amazon Music. Today, we will discuss on the topic enhancing security in insurance transactions. And for now, I'm delighted to welcome our guest Deepak Raju, who is the Chief Information Officer at Royal Sundaram General Insurance, and he's responsible for technology, data, and transformation there. Prior to this, Deepak was a digital leader at RBL Bank, where he drove digital banking transformation across branches, mobile websites, chatbots, web products, and wealth platforms. He also established a robust IT PMO to manage a multi-million dollar IT delivery portfolio and build a 3-year IT strategy and modernization roadmap for the company. His implementation of Agile and Scrum best practices improved overall IT delivery by 3 times. So Deepak, a whole spectrum of experience alongside the digital journey. Great achievement there, and a warm welcome to the show.
Thank you so much, Surya. Frankly, I did check out some of your Insurtech episodes before this discussion, and I must tell you, you seem to have had some fascinating conversations with people in the Insurtech space globally, and many congratulations to you, your team, and all your listeners.
Thank you so much, Deepak. Thank you so much. So with this, we just aim that with the thought leadership we share, it helps people to understand, make decisions better, of course, create better knowledge for the industry. And with that, today's topic, enhancing security in insurance transactions. My first question to you is, how are technologies like digital identity verification and biometric authentication, enhancing security in insurance transactions? What are you seeing in the market?
Oh, great question, Surya. Digital identity and biometric authentication, as you rightly said, is become very pivotal in ensuring trust in an insurance transactions, whether you're buying a policy or you're filing a claim. Let's try and break this down to your listeners on what digital identity is, and we'll deal with the biometric authentication a bit later. Firstly, as you know, the KYC or Know Your Customer became mandatory for the insurance segment earlier this year. IRDA, which is our regulator, they issued a master guideline making KYC a mandatory step for any insurance company issuing policies. Now, this I feel was a significant step in the industry. And as you know, Surya, insurance is a heavily intermediated business, right? It's dominated by brokers, agents, and so forth. Which means that insurance companies never really had a chance to know who the end customer was. That end customer that purchased a policy online, offline, or digital. We had no reasonable way to contact that person. And that was the situation prior to January 1st, 2023. Because customers was, quote unquote, owned by either a dealer or a broker or some neighborhood agent that you may have, purchased a health insurance policy from, right? But this is how the industry was organically structured, right? If, for example, you want to buy a Maruti car, then you go to a dealer and you buy the car, and you buy also the insurance policy from whomsoever the insurance dealer, says you buy from, na?
Right.
Because customer at that point, you only trust the dealer more because he is in a position to give you your money's worth of possibly 5-7 lakhs, which is the worth of the car in any case, right?
Yeah.
Now, this situation has actually changed for good, and that's the introduction of this mandatory KYC process. Now, coming to the why part, see, the concern for insurance companies like other financial institutions, say a bank or an NBFC that's offering loans to customers, or you take a stockbroker like Zerodha, which is offering investment advice. We also have similar concerns. Just like the way these financial institutions have concerns on money laundering, insurance has also been riddled with instances of customers creating fake accounts or buying insurance using someone else's stolen PAN number. Or we've had situations where you overpay premium and seek refunds, or you're transferring ownership of a car to somebody who's doing some illicit trade. We've had many instances like this, Surya, and it's all available in the public domain. I'm pretty sure your discerning listeners can look it up. I once read a case in the West where, you've lived and studied in the UK. Right? This is a case that I've read in the UK where, luxury cars were purchased and then it was junked in a different country and a claim was filed in UK. And, as an insurance company, you got to pay the claim because, somebody is filed for it. And there are laws that mandate you to have a settle first sort of a process.
Right.
Now, these are genuine, concerns, with, which is what the KYC regime is now trying to mitigate to a large extent. And so we know the customer, we know the genuinity of the customer, we're able to verify the basic details of that person, and we are also able to stay compliant with the various anti-money laundering regulations in the country. So that's so far as that's the first part of my answer was the KYC bit. Now, coming to biometric authentication, on the other hand, this leverages the physical attributes of a customer, right? So,
Yeah.
Surya will have fingerprints, facial features, iris patterns that are only going to be unique for Surya. I mean, there's no way that I can, hack into your, let's say your iris pattern and use it to falsify for any kind of verification, and it's not possible. That's not humanly possible because that's
Yeah.
the nature of the tool, right? So from an end customer perspective as well, this whole digital identity plus biometric verification, it is eliminating the need for extensive paperwork. And technology as a critical lever is making, is basically making this happen for the end customer. And a notable example we can see, like I said, the examples of purchasing insurance. We've seen biometric or Aadhaar-based biometric authentication in the health insurance space as well. So when somebody
Yeah.
is filing for a claim, the identity can be quickly verified, and and an insurance claim processing agent will be able to reduce the potential fraud and settle claims faster and so forth. So this, I think, largely is also been enabled by the Aadhaar biometric railroads the country has managed to put through.
Right. Yeah. As you mentioned about the physiological or the behavioral characteristics, that primarily goes into the biometric authentication process, like for example, fingerprints, facial recognition, voice patterns, and also with the emergence of technologies like AI and others, nowadays behavioral traits like typing speed, etc., are also getting verified.
Correct.
So, do you really think with so much of innovation in place, and this is just out of curiosity, I want to understand, all these are can or rather can be foolproof, or there's still a chance of any sort of a breach?
Well, see, look, there is bound to be breaches,
Right.
and I know that I'm responsible for tech and security parameters in any organization, but hackers are also smart.
Yeah.
The threat
Yeah.
landscape is also becoming much more sophisticated and harder for companies on the other side of the defense to sort of defend.
Right.
But I think the fundamental the white elephant in the room is actually securing the customer data, Surya.
Yeah.
I mean,
Yeah.
this is a challenge, right? And so let's say, for example, if you, as a customer, you're buying travel insurance, you have to put your PAN number, and the company needs to look up a PAN number, do a verification against an NSDL service, for example. Or if you don't have a PAN, you have to submit a Form 60. And that's the only way that I know, that you're a genuine customer and you're able to, and I'm able to satisfy as an insurance company all the KYC and AML, the compliance norms, which are very stringent, stringently applies for, used to stringently apply for banks. Now it's like stringently applying even for insurance companies, right? But the authenticity of the data that we have, there are data breadcrumbs that we leave across the board, right? So I have CIBIL record, and where my name could be different. I have a CKYC record, which says perhaps my last name is different than the given name on my passport, right? What do we do in these cases? How do is there a way that I can realistically use these various data sets and do a match and ensure that yes, this is the customer that we are indeed talking to, and this is bona fide, right?
Yeah.
It's tricky. Like you take my own name, right? My name is spelled as DH, Deepak with an H, which is like quite strange. A lot of people ask me, and that's almost become like a default conversation starter, right? South Indians, I mean, you born brought up in South India. I mean, I was, I was born here, and South Indians typically our given names on passports are always your father's name, an expansion of our father's name. There used to be a time where people used to give the birthplaces, like Aryakudi Ramanujam Iyengar. Aryakudi is a
Right.
name of a
Yeah.
town, right? But modern names, we don't have that option. We just use our father's name and expand that as our given names, right? But like for example, my PAN card, my second name is different. It's an expanded initials of my father. For some
Yeah.
reason, when I applied for my PAN card, 25 years ago when I started working, I just left it at that. I never, cared to really change it. But in my Aadhaar, it's my name as you will find on my credit card. Whereas in my passport, it's is an expansion of my dad's initials. So it's a little complicated, right? And I was at this
Yeah.
broker meet in Bangalore recently, where there was a customer complaint that, boss, my name is in a KYC record is different than what you have in your record, or what a customer files for in a proposal form. And what do we do in these instances? We have to be able to make sense of all these public data
Yeah.
sets, and leverage some kind of tech solution. So, like, when this particular complaint came to me, we said, okay, can we put together some kind of a fuzzy name match logic, right, to
Mm.
circumvent this problem? And there are many name matching algorithms that is available, which is able to basically circumvent this kind of variability or complexity in names that are spelled differently but sound the same. Like Shiva in South India is SIVA, like Sivasalam or Siva
Yeah.
Prasad. You travel a little up north, MP, or Delhi, is like Shiv Kumar, or Shiv Shankar is spelled with an H,
Yeah.
right?
Yeah.
Even in UK, for example, or America,
So
wherever,
my son's name is also Shiv and starts with an H.
starts with an H, right? There you go. So
So
even
yeah,
in
one
the
of my
West,
very
for
close
example,
friends in Andhra
right.
Pradesh. So
Uh,
his name is like his name, then prior to his father's name, and then his grandfather's name. So all together comes on his identity.
Yeah, especially people from Andhra Pradesh. Yeah, you said
Yeah.
Andhra Pradesh, right? Yeah, I mean they have really really hard names that often get mispronounced by people in the West, for example. Right. So yeah, this is indeed like a real life problem with lots of these data crumbs being available and curated by agencies, both government, quasi-government, and private sectors. I mean, like some of these companies that today in the startup space, they've done a fabulous job of just taking this public data goods and curated this whole data sets, and they're able to offer APIs and for insurance companies and banks to underwrite loans,
Mm.
right? So
Yeah.
coming back to this point of how we solved it, we used a name matching algorithm. Like Soundex is a name matching algorithm that many people use, and it was actually patented in 1918. Then there were newer variations that got built on top of that, like Metaphone and Double Metaphone and all that. So this is basically tech that is coming to your rescue to be able to solve for a real life problem, right?
Right.
Because we really need to be able to offer a loan to a customer and know the fact that we know this is the person that he says he is. Now, coming to the cutting edge of it, I mean, just taking let's say a futuristic a viewpoint here is what we call as the blockchain regime, right? And the blockchain has been in the industry for about, I don't know, 10 years or so. As a tech, it's a fabulous piece of tech, and we know it is distributed and tamper resistant, and what we call as the immutability of the ledger. And that is something that a lot of companies have now started exploring to preserve the integrity and confidentiality of data on the chain.
Mhm.
Now, all the blockchain enthusiasts and aficionados are going to kill me for saying, "Oh," but let me just simplify the way it works. Firstly, on a blockchain transaction, or you take any blockchain transaction that we enter on the chain, like Coda or Hyperledger. First, we create what's called as a block, and a block contains a header and a body. I'm just getting a little technical for your the benefit of your listeners. So a block actually contains a header and a body, and a body contains the actual data set of the transaction, and a header contains the hash of the previous block. So there's something called as a genesis block, which is the first block that gets created in a blockchain, and then there are multiple subsequent blocks which refer to the previous block, and there's a hash, which is what makes this whole blockchain a lot harder from a mathematical perspective to break through. Then you have what is called as a Merkle root of a transaction. So Merkle root is nothing but a hash of all the
Yeah,
hashes in a
yeah.
transaction. And then, to make it a little more sophisticated, people started introducing the concept of called cryptographic nouns, which is some arbitrary number, and it's a single use for any authentication protocol in a blockchain. Now, in reality, this blockchain is as simple as how I've explained it. Just a block with a bunch
Mm.
of hashes and references to a previous block, and then the block is sort of distributed across multiple nodes, and then and you have two-thirds majority, and then a block gets admitted into a blockchain, and a transaction is finalized. That's the most simplest way of a transaction of any data set that is going into a blockchain. And that's why the natively the power of the blockchain tech is so superior, because it's very simple, but it is really hard to break, because the underlying mathematical equation is really
Yeah.
humanly impossible to sort of break. In the insurance business, Surya, I think we still still, I would say blockchain is still in its infancy. While I'm hearing a lot of companies are, exploring blockchain for, putting up, let's say, if I'm transferring my policy to another customer, also let's say if I'm transferring my vehicle to my wife, then I'll have to transfer all the policy and claims data to my wife, right? So for an
Mm.
insurance company, this is going to be like very cumbersome, error prone. So therefore, can blockchain come to the rescue and sort of simplify this whole process by providing a shared and immutable record? That is what is in simply put, this is what most of the insurance companies are trying to leverage. So thereby, okay, if I can implement some blockchain to with some degree of success in helping me streamline this whole business of data manipulation and transparency, I would say many of the companies have managed to see the proof point, and quite successfully. But there's a problem of scale, because blockchain, as we know, is natively the throughputs are not as large as, let's say a Visa can have handled throughputs of a million transactions a second, which a blockchain can't do.
Right, right.
Right?
Yep,
Not
yep.
yet. I mean,
Yeah,
many
not yet.
players are trying for it, but we've not reached there yet. And the problem of larger cooperation, because in the insurance industry also, for blockchain to get adapted at scale, we need a lot of these players to come together. We need the agents, we need the brokers, we need the third-party administrators, we need the insurance couriers, we need data providers like the data providers like Aadhaar and NSDL and CQIC, which is maintained by the registry. Then you have the Insurance Information Bureau. So all of these players need to come together on a single platform and be able to share data and make it a reciprocal interface. Otherwise, the whole concept of blockchain doesn't work.
Yeah, yeah, absolutely. So, I was speaking about blockchain, uh, and of course, the way the infrastructure functions, security part, and etc. And you rightly mentioned about how important customer data is in insurance. So, do you see this addressing this challenge of security in data for insurers?
Yeah, it does. See, I personally apply blockchain use cases, and I use a model called as a FITS model, right?
Right.
A FITS is an acronym that stands for, fraudulence, intermediation, and throughput.
Mm.
So wherever there is a degree of fraud or high moral hazard, and we try and use blockchain, because it prevents. There's an immutable record. We know that the ledger can't be broken into. Wherever there is heavy intermediation, like insurance is heavily intermediated, both at the policy purchase journeys are intermediated through intermediaries like agents, brokers, bank assurance, like banks, NBFCs, and with the open architecture, they're also allowed to sell insurance, right? And then you also have intermediation at the claims level, like the notification of loss to an insurance company. That is intermediated in the health space by a third party administrator, like a TPA, right? So yeah, I usually use this as a technique to sort of see whether blockchain fits into this industry. Do we have sufficient use cases? Will it seamlessly work? Will it, can the various partners come in together to, make sure that data is shared in a reciprocal way and, it is secure and frauds can be prevented natively. So that's that's the way I look
Yeah.
at customer data.
Absolutely. From blockchain now moving on a little bit to the AI element of the emerging tech. So how do you think AI and ML detect fraud in insurance transactions while maintaining a seamless customer experience? Any notable examples from your end?
Mm. So this, I think, again, a great question. If there is one topic that has dominated boards or board agendas over the last, I think, single-handedly last 5 years, it's been artificial intelligence. It started with RPA, which is the crudest form of artificial intelligence. 10 years ago, we had the likes of Automation Anywhere, UiPath, and like a dozen companies that sprung up, and they captured the imagination of the Indian boards, and they said, okay, is there a way that we can automate? So RPA is now evolved. So there's a lot more evolved, services that are available, which is AI and ML, and they are indeed revolutionizing the fraud detection space in the insurance sector. And these technologies have capabilities to analyze massive amount of data sets. It can identify patterns that are indicative of fraudulent behavior. And from an Indian context, they're making significant impact. And they are, see, any fraud that we can prevent, Surya, it can add to the bottom line. And insurance businesses are all really what should I say, tight from a quality, profitability, and growth perspective, right? We call it the devil's triangle in the project management space, like time, scope, cost. From a profitability perspective, it is for the insurance balance sheet perspective, it is
Yeah.
GQP, which is growth, quality, and profitability. So if you take health insurance, for example, the fraud claims can cost us, millions of rupees or, millions of dollars of claims, right? But is there a way that I can apply AI and ML to identify anomalies in the claims data set? And the answer is yes. Can these machine learning algorithms scrutinize data and help me detect discrepancy? The answer is yes. And there are, proven examples, like in Royal Sundaram's case, we have a AI ML center of excellence, and a fairly evolved center of excellence that has the best practices, and the know-how is fairly well evolved. And there are cases that are, we have training data sets that are that uses some of these, ML techniques to be able to build value to the bottom line.
Right.
We have seen a few examples, like if you allow me to, expand on a few examples that I've seen in the health space or the motor space, just for the benefit of your listeners. What we've seen, most common examples are, application frauds in the health insurance segment. Somebody claiming for a room rent for non-admission case, like I just have a toothache, but somebody's claiming for room rent. We know it's a fraudulent case, and there is collusion between provider and payer or whatever. I mean, I don't want to name names in terms of hospitals or insurance companies, but these are cases that are well documented and available in the public domain for people to see. The other thing that we have seen most commonly are, some customer claiming for a total damage for a car. Like let's say you've had a flood situation, the car was damaged. Let's say in Bangalore, is something that we see quite often, right? There's a submerged rainwater situation. Somebody tries to start the engine and files for a total damage claim, and the claim is never admissible,
Yeah.
because you have an insurance contract that technically says there is an engine aggravation clause in the contract, and if you start the vehicle in a submerged water condition, the claim is not payable. So such kind of models are available. So I don't have to really look at data set. I mean, I don't have to really look case by case and be able to make a decision. I can, simply create a model, run something like a Bayesian, correlation model, and it can tell me, okay, so these are all potential fraud cases, right?
Right.
So you can either reject the claim right away, or you can, investigate or whatever, right? The the flip side to this argument is that AI ML is only as good as the bias of the person feeding the data, right? And there have been many cases where AI ML is actually biased, right? Because how can a machine be biased? Machine can only be biased, with the bias of the person that is feeding in and
Yeah,
writing the
yeah.
algorithm, isn't it? So, Surya, we once had a customer from Madhya Pradesh who had a two-wheeler policy with us, and unfortunately, he had an accident which resulted in him having a partial loss of leg. And the situation, required that he will go on crutches for the rest of his life. But the customer had filed a claim, but we rejected the claim, or any insurance company will reject the claim because the claim is only payable because on the contract, the letter of the contract says disability needs to set in within a 12-month period from the date of the accident. And so the claim was rejected, and customer said, okay, no worries. This is why, I mean, he just took it as fate, as fate would have it. But over a period of 3 years, the customer's condition had worsened. Right? It became quite severe. I don't know, could be due to a medical issue or whatever that his situation was. His leg had to be amputated. And maybe he was in a profession that where he had to use his leg or whatever, and his financial situation had also sort of worsened, right? But the customer's resolve was such that he took to sports. He became a state level Paralympic discus thrower. And
Right.
he wrote us a letter after many years, and he said, 3 years back, I had this policy with you, and I had a claim situation, and a claim was rejected on technical grounds. But here I am in my new avatar as a Paralympic athlete, and these are the sort of laurels that I've had. I've won state championships, and I need funds to represent India. Now, what do you do? I mean, AI ML is not going to be able to help insurance companies, tread over this kind of moral dilemma, right?
Yeah.
Because, AI ML algorithms, the bias in a AI ML algorithm is going to be the bias of the person who's feeding the actual algorithm. Like a Bayesian co-clustering, algorithm is not going to help you apply some humanitarian approach to claim. So Surya, long answer short, while I'm all in for tech and AI ML, we do need a human angle because health insurance is also about the healthcare delivery in any country, and it is not just a political mandate or some kind of a service imperative, but it's a basic human need.
True, true. No, absolutely. I think, of course, being in a heavily regulated industry and how the ecosystem worked all this while for insurance, and how it is coming up today to actually, shape the future of insurance with the new generation of customers that coming in. I think
Mm.
it's going to be interesting time for insurance, but having said that, the road will not be that easy,
Yeah,
and primarily
totally agree.
because stakeholders have to come under the one roof on the same boat.
Absolutely. The government is also proposing insurance for all by 2047, and
Yeah, yeah,
I can tell you they are, unassumingly the biggest innovator in this ecosystem, and all and we can see so many initiatives from IRDA, the National Health Authority, Digital India Mission.
yeah.
Just plenty of things that I'm personally involved in, and I can only say that the future is like really bright for
Yeah,
the insurance space.
absolutely. I mean, it has to get more inclusive, and insurance should be treated in a way it should be, rather than how it's being, treated now. Of course, there are reasons behind it, but yeah, things will change.
Absolutely agree.
Well, thank you, Deepak. A fantastic discussion, and thank you for sharing your thoughts today. A true delight to have you as our guest.
Thank you so much, Surya. It's been an absolute pleasure, enjoy your weekend.
And lastly, to wrap this up, thank you for listening, and see you at our next episode. Take care and stay safe. Goodbye for now.